Here is the new weekly outlook for this week. We're going to take a look at the fundamentals as always first, and then move on to the technical side. So jumping right in, first we're going to go over some central bank news, starting off with the Fed first. We have Fed officials signal rates likely to stay on hold until at least September. Last couple of months, in the last couple of meetings, the Fed officials have made it clear that they were waiting to see the full effects of the Trump administration's tariffs that were implemented and the retaliatory tariffs that were implemented by other nations on the US and their full effects on businesses and housing as well. So now, given the current situation where the tariffs have already been implemented, now there are trade negotiations and trade talks in place. The Fed officials are reiterating the same exact sentiment, which is that they're waiting to see and they're collecting data right now, trying to get a better picture and watching things as they develop with these trade talks. So potentially we might see more rate cuts, but they're not going to happen until September. So the first prediction was that we might see 4 rate cuts and then it dropped down to 2 rate cuts now starting in September. So there's no sentiment whatsoever that there is going to be any sort of rate cut happening next month in June or even in July, and that they're waiting until September to see what happens. But also, they need to wait for pretty much about 3 to 6 months to see how things settle, especially with these trade talks that are going on. So if the Trump administration's ongoing trade negotiations drag on, that is going to start to push much further into the summer, in which case they're not really going to know what the true effects are going to be for several months after that, hence waiting for those 3 to 6 months to see how things are going to settle. So right now, again, a lot of the attention is more around these trade talks with China, with Japan, with EU, and a lot of these other nations to see what ends up happening and what is going to be the true effect of that on businesses and households, especially as those two are also starting to struggle to predict how tariffs and other policies from the administration will reshape the US economy. And then as we continue down, through these trade talks, we have also seen that the Trump administration recently reached a temporary agreement with China to lower tariffs on many of the imported goods. The negotiations are ongoing with key trade partners halfway through a 90-day pause on reciprocal levies, but again, just waiting to see what happens. And as more news pretty much comes out, we're starting to see those actual effects onto the technical side as well, where we're seeing those massive volatility kick in, but still sitting on that uncertainty economic outlook sentiment from a central bank perspective. Moving over to Bank of Japan. Bank of Japan is going to hold 2 meetings on Tuesday with the representatives from banks and securities firms to hear their views on the current and future pace of the central bank's pullback from the bond market. There is also going to be a 3rd meeting on Wednesday with the buy-side groups, and these meetings are basically supposed to help the central bank make more informed decisions for the next meeting next month. And potentially at this point, the investors are looking for any sort of hints from these meetings to understand what to expect next month when the central bank is going to be meeting and there's going to be the interest rate news coming out. Overall, as we continue down, we're starting to see that there is already a plan in place where the central bank is cutting back on a lot of the bond holdings, the long-term government debt, which its holdings of the long-term government debt stood at 576.6 trillion yen at the end of last month, down by only 2.2%, but it still intends to cut the amount of bond buying by around 400 billion yen every quarter until the monthly amount dips to 2.9 trillion yen in the first 3 months of next year. So they've already said that the bank is not really going to change that plan in principle, but we're also going to watch out to see what happens in these next 3 meetings. Most likely the sentiment is that a lot of these representatives are simply going to suggest slowing down the pace at which they're cutting the debt. And so that way it's not a huge hit to the bond market, and that, it really minimizes the overall volatility that investors will be expecting in these bond markets as well. Let's continue down. Yeah, that's pretty much it for this article here as well. And then following on with that trade news that we were talking about earlier with the Fed article, we have Japan's prime minister saying that Japan won't compromise its national interest in trade talks with the US by fixating on any time limits. They're basically saying that they don't want to follow the same path as UK, along with a lot of the other nations who try to become the first nations to reach a trade agreement. And one of the more important things here for Japan is going to be not accepting a deal that's not going to address a separate 25% tariff on cars, which is a key economic engine for the country, for Japan. They've also been hit with more tariffs on aluminum and steel industries as well. And overall, they said that, you know, they don't have a time limit in mind, but again, they are very cautious of how long these negotiations are going to take. But again, they're not going to make any large compromises just to get a trade agreement. And so they're pretty much willing to wait that out. But this week, we are going to see that there's going to be a trade negotiator coming from Japan to the US for a third round of talks with his counterparts. As the negotiations continue, the tariffs are expected to hit Japanese companies for longer, and Japan's economy already contracted in the first quarter, even before most of the extra US tariffs were implemented. So that was a lot more of the sentiment based off of the fundamentals that were coming out, which is that there are going to be tariffs that will be implemented in April 5th specifically. And so as soon as that news came out and before these tariffs were even implemented, a lot of the decisions were being made based off of those early fundamentals, that early news, and a lot of that was the market sentiment. So we did see a lot of volatility on the technical side in the markets as well because of that. But businesses, investors, etc., they were already making decisions based on what is about to happen, which is the tariff implementation on April 5th. And then after that, we're starting to see more of the effects that are coming into play with a lot of these nations being hit very hard, their economic perspective, and then also the US as well as consumers, housing, spending, and also business spending is also being affected. Now, moving on to the economic calendar for this week, it's quite easy on the US session and even majority of the Asian session. So Sunday, we start off quite easy, as you can tell. And then today, we had a bank holiday from Canada. A lot of FOMC members who were speaking today, but for the most part, it was kind of a quiet morning. And then in the afternoon, we saw that things started to pick up a bit more as we had more FOMC members who were speaking. And especially on the equity side for US30, we saw that there was a huge volume, you know, closer to the actual New York and London closure, which we'll see on the technical side as we break down the technical setups there. And then today, in about an hour and a half, we have interest rates coming out from Australia. So if you're trading any Aussie pairs, this is something that you want to pay attention to. They're expecting another rate cut here from 4.1 down to 3.85. And the more important thing is also going to be to understand what is the rate statement and the monetary policy statement. That's going to give you an outlook when it comes to the economic forecast from the central bank perspective, and also are they moving into a more aggressive monetary policy, more contractionary monetary policy, or still sitting at the current level. Then continuing on to Tuesday, we have CPI data coming out from Canada. We have G7 meetings also happening all day. But other than that, it's a very quiet week, quiet day. And then we have CPI data coming out from the UK and the London session. Then on Wednesday, again, a little bit easier on the economic data side. Thursday is when things pick up a little bit, where you have a lot of PMI data coming out from the manufacturing services aspects from the Eurozone, and then also the UK, and as well as the US and New York session. Then Friday, we close off with retail sales data coming out from Canada. And then again, a lot of FOMC members who are going to be speaking. So this week, I'm expecting a lot more consolidation to happen on the fundamental side. And then especially as we're bouncing off of some of these higher time frame levels, but great opportunities lining up for scalping opportunities or even day trades, not so much for swing trades just yet. Now, coming on to the monthly time frame, we're going to start off with US30. So we just bounced off of this monthly support level of 40,700. we're pushing up, we're breaking the previous monthly highs. And so what I'm going to do is mark off the current monthly top wick, which is this little top wick right here. So if price can continue breaking past this 42,900, then we know that we have good opportunities to the upside to come back and target this. And we will adjust these levels as we drop down to lower time frames as well, just to narrow in our levels and our ranges even more. Coming onto the weekly time frame, we see how price pretty much checks off at this point too. You had a nice bottom wick rejection. We had a lot more candle closures down here, but this was more of that liquidity grab, that wick rejection that we saw in the monthly time frame. So that liquidity grab pushed back up, and that has happened in the past as well here in 2020. Same thing. And then here we had more of the candle closures in 2022 and then a nice push up. So that's pretty much what I'm expecting here too, as a nice liquidity grab to come back and target into these areas. And then when we come onto the weekly and look at the resistance here that we have marked off, same thing. It was a resistance here in the past. Price did try to break below it, came right back up. So we know that there's a lot of price action that's going on over here. Come on to the daily time frame, same thing. You start to see a little bit of a break and retest. Price starts to break above it, couldn't really do that, came right back down. And then same thing here, a break and retest, try to break above it, couldn't really do that, came right back down, grab some more liquidity from this previous area where price keeps tapping into over and over again. And then we see that nice volume to the upside. So that's how you know that's a liquidity area. Finally got a break and retest that continued to the upside to tap into this area. We come back, revisit this area, nice sell off as a quick little corrective move from that sell off that happened earlier. And that's the area that we're tapping into right now. So if we're going to look for any continued buy opportunities, we would want that 42,900 to be broken and then continue to the upside. But if price simply rejects this and continues breaking its own daily low, then we have a potential sell opportunity to come back down and tap into the zone. So you can mark off more of that bottom wick rejection on that daily candle, which is at 42,700. When we drop down to the 4-hour time frame, we see that price, after tapping into these areas, grabbing liquidity and pushing back up bullish, it was a nice bullish structure to the upside. But on the 4-hour time frame, as soon as we broke above this zone, price came back up, slowed down in that volume. You start to see the candles coming right back down, the bearish volume starting to kick in. Respected this area as support, continues to push back up, consolidates a little bit into the same exact area as to the left. And then in the current price action, we come back and revisit into the same exact consolidation area. The volume starts to die down on the 4-hour time from here too. So last couple of 4-hour candles, not a lot of volume in the body itself. And then this new one started forming, again, not a lot of volume right now. So if price breaks this right here, that 42,700, then we know that we're headed right back down to come back and revisit into this, and then potentially even further down. But right now we're still in that bullish structure. So we're just simply waiting for a corrective move so the market can collect some more orders, generate some more liquidity prior to a continuation. Drop down to the 1-hour time frame, and that's further confirmation of a lot of that consolidation and the volume dying down here. So again, the market's either going to consolidate or give you a corrective move to come back and revisit into this area and then continue pushing if it's going to maintain that bullish structure. Coming on to GBP JPY. On a monthly time frame, GBP JPY is starting to consolidate, so we know that we're not really ready for any swing trade opportunities here just yet. It's mostly going to be day trades or even scalp opportunities. So marking off that current monthly low right at that 19600 area, and then that top wick rejection on the current monthly candle as well. So that's our range at the moment. And once again, you can adjust that as you drop down to lower time frames to narrow in your zone even more. Coming onto the weekly time frame, we see how price has rejected into this area several times. Last week, we came all the way up top into 196.4, rejected that, came back down and closed bearish. This week, we had a bit of a gap down that happened. Price pushed up a little bit, but again, it's very early on into the week, so we do have a ton of opportunity. Still waiting, so we haven't missed out on anything. If this is simply a top wick rejection and then this kind of flips back down and continues pushing back down bearish, then we have that opportunity to come back and revisit into that 190.6 area for almost 200 pip range. If price breaks its own high and breaks above that top wick rejection and above the zone, then we can come back up to fill that wick for another 200 pips. So there's 200 pips in either direction here. Come onto the daily time frame. You can also mark off this low right here, which is going to be your 192.9 area. If price breaks below that, then again, your sell opportunities down here. Anything in between, I would stay out of that. unless you're looking for a trade in high volume time, which is basically for DJ, it would be either the Tokyo Stock Exchange Open or even the Tokyo London overlap. And you can also try to trade this during the New York session, New York Stock Exchange Open, because those are the most high volume times. But again, those would be quick zone to zone trades, quick scalp opportunities in between. But the reason why I would try to stay out of it is because of that consolidation that has already happened here to the past. And there's a very high chance that price is going to consolidate here again. So when you drop down to the 4-hour time frame, you actually see an example of that, where price tries to continue pushing back down, taps into that 192.9 area, and then rejects that area just to come back into the zone. And that's kind of where we're hanging out in right now. Let's come on to USD JPY. USD JPY also bouncing off of a strong monthly support, as you can see, which is at 143 level, flat. You can mark off the current monthly top wick rejection as well, 148.8. And that's our range at the moment. Price needs to either break above this or below this for a longer term trade opportunity. It's a monthly time frame, so most likely those are going to be your position trades. You come onto the weekly time frame, this level checks off where price taps into it several times, really fakes out, and then pushes right back up bullish, right? So grabbing liquidity from these areas. And then also a strong resistance where you had candle closures, a huge sell-off, price tries to break above it, can't really do that, comes right back down. Same thing here, a nice rejection, push back down. And then same thing here as well, where price was respecting that as resistance. Right now, we're already starting to break the previous weekly low. So if we can keep pushing our own low here, that own bottom wick, we know that we're going to have enough bearish volume to continue pushing down. So that 144.7, push back down into that 143 flat, which is another 162 pips. If price flips back up and breaks its own high on the weekly time frame, right around here at 145.5, then we know that we have a longer term buy opportunity to the upside for a bit of a corrective move. Anything in between, again, it's going to be your quick scalp opportunity, a quick zone to zone. This entire range is around 80 pips almost, so you're looking for only a quick scalp opportunity in between. Drop down to the 4-hour time frame, a ton of consolidation. So again, that's your zone to zone trade. But if you're not really comfortable with trading with zone to zones or understanding the limitation of your trade or have a problem with over risking over trading, just wait for these zones to be broken. Wait for that resistance and support to be broken, just so you have a longer range or a bigger range for a longer term trade. Coming over to gold now, tapping into that all-time high, rejecting it up top here at 3439.8, and then you have a bottom wick rejection right here, 3124.2. Come on to the weekly time frame, you start to see a bit more consolidation forming. So if I'm going to look for any continued sell opportunities based off the weekly time frame, I would want price to break its own low, so then it can come back down and fill that wick. But right now we're just sitting in that consolidation. Very high chance that you have opportunities for another zone to zone trade here. And this is a pretty big range, as you can tell. So those are going to be your two levels based off the weekly time frame. Come on to the daily. Daily is consolidating. So what I would personally like to wait for is price to break out of the zones and then look for my potential trade opportunity to break above that daily consolidation. So then we have enough volume to come back and tap into that 3328.5 and even further up into that 3439.8. Or if price breaks the low, then you have those clean sell opportunities to the downside. You drop down to the 4-hour time frame and you see another confirmation of that consolidation as it has happened in the past. Price is pretty much doing the same thing. So if you're looking for scalps, once again, you can do a zone to zone trade. So from that 3202.5 coming up to the top of this range on the daily time frame. But understand that's the limitation of your trade as price keeps bouncing out of it. But if you're someone, again, who's not comfortable with trading in consolidation, just wait, be a bit more patient in the markets, and then you have better trade opportunities lining up. So this week, because of the fundamentals, we have a lot of great macro fundamentals, but economic data points, not so much. So it could be another slow week. Just be a bit more patient. Make sure you're not over trading, over risking, any of that stuff. In a week like this, it's very easy for people to blow their account. Other than that, I hope you guys have a great rest of the week. If you have any questions, as always, feel free to comment below or reach out to me on Instagram at SharmaFX. and I'd be more than happy to answer any of your questions.